Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And yes, Geneva does have a down payment assistance program that actually works, not like the California Dream program that's coming out again in a couple of months. And it's going to be another one, just like before, a hoax that did not help a whole lot of people. Call me. I'll get you in touch with the Geneva DPA, down payment assistance. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. We do not know APR, points paid, points received. We just know the locked rate. It's with consumers across 42% of all mortgage transactions nationwide. 30-year conforming loans yesterday locked at 6.599. Jumbo loans locked at 7.092. FHA 6.37. USDA, that's the rural areas, generally no down payment, 6.503. And the best loan on the market for those that earned it, that would be the 30-year VA loan, 6.179. That is the information. If you want our commentary, our thoughts on what's going on in the mortgage world, rsrmarketminute.com, rsrmarketminute.com. We send that out each morning as early as the data allows so that you have some thoughts about it, make an informed decision. But let's take a look, and that's the information from yesterday. Let's talk about what's going on today. We'll look at the S&P 500 if I can get it to show up on my screen, which I am not getting it to show up on my screen. But that's a whole different story. But none of those numbers really are going to make a whole lot of difference until the Fed comes out. 38, down 38 points right now is where the S&P 500 is. 10-year Treasuries down 10 basis points. That's the yield, 3.96. Good news there. The mortgage-backed security, the bond, is up 27 basis points, which means rates are down so far for the day. Again, it's going to all come down to what the Federal Reserve says. But what's driving all of this information? So GDP, stocks and mortgage bonds, both higher to start the day. Yesterday, the 5-year auction was met with weak demand. People did not want to buy that bond. Means they didn't think that price would go up and rates go down. That's the reason for that. Later this afternoon, there's going to be roughly $40 billion in 7-year treasuries, which will have to be absorbed by the market. We'll see more about that. Let's see what else we've got going on here. We've got the ADP report came out today. 107,000 jobs created during the month, weaker than the 150,000 jobs expected. Goods producing sectors added 30,000 jobs. Manufacturing only added 2,000 after falling last month. Construction added 22,000. Services added 77,000 after 155,000 in the previous month. Leisure and hospitality was the biggest portion of that. Try and figure that one out. ADP has also reported that annual pay for job stayers increased by 5.2%, down from 5.4. Job changers saw an average increase of 7.2. Subtract those two. 7.2 minus 5.2. That's the premium you get for changing jobs. That was at about 7% premium a few months back. Now it's only a 2% premium. So it makes more sense for people to stay where they are. We're going to watch for the BLS report tomorrow. No, I did not say the BS report, even though it is BS when it comes out on Friday. Equity residential, talking about apartment rents. Apartment list release. Yesterday we got the apartment list release, which is known covers only new rents. Equity residential covers both new and renewals. They showed that new rents declined 3.7% year over year, a larger drop than the apartment list of 1% decline. Renewal rents were up 4.9%. So your landlord does not want you to stay. They make more money when you leave. Just throw that out there for you. Blending new and existing rents together, they saw a 1% increase from last year, much different than the 6.2% and 6.4% we saw in the CPI and the PCE. Big issue that the Fed's going to be looking at right now. The Fed loves the PCE report. If you look at the last 12 months, it's been at 2.9% is their core PCE. They want that to be at 2. But finally, they've started waking up, and instead of looking at a 12-month run rate, they've been looking at a 6-month run rate to see what's more current, and we're at the second month in a row that we've been below 2%. So we're at 1.85 is where that run rate is going. That's the Mortgage Minute brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990.